Bitcoin price continues to struggle as gold and silver absolutely pump. Gold right at a new all-time high right now, and silver making a move. What is this telling us? I know who has some ideas. Of course, that's Mike McGlone, because he always tells us about what gold is saying about the rest of the market. We also have the United States moving a number of warships off the coast of Venezuela. Are we on the brink of war? We have a lot to talk about today on Macro Monday. Let's go.
Let's go.
Good morning, everybody, and welcome to Macro Monday. Happy Labor Day to those who celebrate, and give the channel a subscribe and a like. I'm going to go ahead and bring on Mike, Dave, and James. Thanks for showing up on this very important national holiday that I would argue 99% of people don't know why we celebrate. Labor Day.
Well, it's I guess one could argue that.
My kid this morning was like, Labor Day, what are we celebrating? People who labor. So yeah,
the sense is it's
AI. Celebrating AI.
Oh, that's right.
To be labor
Day.
But it's obviously for those who are, and there are lots of non-Americans watching, it's the end of summer, and kids go back to school afterwards in America. So it's that last gasp.
That's right. It's exactly what it is. So, Mike, I know the markets aren't open today. I don't know if you had the morning meeting, but we can give the summary, and then we'll skip the morning meeting and we'll jump straight to gold, because this is actually really important. And we have a lot of headlines surrounding this. Gold and silver jump as rate cut bets reignite bull run. We got Bitcoin split personality. We'll get into this on display as gold hits new record. As I mentioned before, kind of struggling. This is the chart I really want to dig into after you kind of give your gold silver breakdown. Foreign central banks hold more gold than treasuries. This is the first time in 30 years that this has crossed, since basically 1996. And I want to dig in with everyone on what this means, because this opened my eyes when I saw it. But go ahead, Mike. Where are we at with gold?
Yeah, it's I'm becoming very concerned about markets, very similar to 99, 2007. I remember this eerie feeling before 9/11. Not that I called it, but I remember being way overweight long bonds, and we all knew internet stocks were too expensive. Just getting that feeling now. And the key thing to remember about gold, I think, is it's almost a perfect storm. Number one, we have the most discombobulating president probably in U.S. history. So gold loves President Trump. It just, the things he does, pushing back on Fed independence and pushing back in U.S. data and all those kind of things that are somewhat traditional. That's fine. But it's also what's happening on a global scale. We know that central banks, they're still buying. They've curtailed their buying. The World Gold Council puts great data on that. But the significance is the last 3 years, they bought about 1,000 tons a year. That's almost 2 to 3 times the average of the last 10 years. And there's good reason for that. It's the world order shifted with the unlimited friendship. And now we have this very, the whole world looks at the U.S. with their eyes wide open. What is going on in that country that used to be there to just save us, and we could just export stuff to? Thank you very much. But that's somewhat ending. And at the same time, what's really been happening is gold investor inflows are significant this year. ETF flows, they're up about 11, almost 12% now. And that's after 4 years of outflows. The thing is, that's very rare to happen when volatility is going down. Now, the VIX 50-day moving average is potentially, looks like it's just bottom. It's very rarely happens, and when the stock market's hitting record highs. So I think what's happened is we're seeing this paradigm shift on a global scale where people are saying, all right, we need something to diversify us and lock in some profits, certainly from equities. And so here's my numbers. Gold's put in like almost a perfect bull flag for 5 months in a row. This is starting the 6th month as of today. And then you look at yourself like, okay, looks too easy. It's just supposed to break out to the next key level, which is around $4,000 an ounce. And the key thing, it's also pulling up all the other precious metals with it. Gold, silver's catching up a little bit. Platinum, one of the best performing metals this year, but it was gold. The gold platinum ratio just a few months ago was platinum was the lowest in our database going back almost 30 years. So everything is breaking out for gold. And the key question is what stops now. So I'll end with this. The key thing I'm worried about is we're starting September. We know this is sometimes this time of year, September, October, you can have years trading in a few months. We have this eerie, very low volatility period. The low for the year in the VIX was just last month, around 14.2. And that's when Bitcoin put its high last month. The high for the year in the VIX was in April, and that's when Bitcoin put in its low. So people are starting to realize that the whole crypto space is wonderful, but it's very much significant, even certainly Bitcoin, a risk-on space, and gold's a risk-off. And we're getting towards the time of year, it's a risk, typically volatility picks up. So you absolutely need the stock market to go up. You want to see Mr. Trump pull back on his outrageousness, but that's not going to happen. So I see a perfect storm for gold to go higher. I just don't know what's going to end that. And that's when I look at myself. Well, that's when things go wrong. If I was leveraged long, which in my past was. So if I was leveraged long and I was saying the same thing, it would go down. It's just the way things work when you're a trader. But so I see gold still one of the best performing assets here. So I'm very concerned it's going to continue to do that. And I'm concerned we're going to have a period that we're going to look back at this period right now. Similar to what we did is 1999 and 2007. That's why, to me, these next 3 months are so significant. The stock market, risk assets, Bitcoin has to go up. But I think at a minimum, the VIX is at least going to go to 20. That's basically the average this year. And then what it does after that. And at minimum, Bitcoin's at least going to go to 100,000. It's what happens after that that matters. And gold just is front running things.
Yeah, but we've had silver that's been kind of lagging this entire time. Here's the silver chart. We're back to the highest we've been since 2011. Actually, a hair's breadth, 25%-ish off the all-time high, which, depending on who asked, about 49, just sub 50. We're back over $40 for the first time since 2011. This actually looks like the gold chart looked before it broke out to new all-time highs and basically flew from 2 to 4, right? So this isn't just a gold thing. Dave, I see you nodding.
You got to put it in $20-25, and the chart looks very, very different. That straight line will look like Swiss cheese. It will be like the tissue paper it's going to rip through. What people consistently do in trading is do everything in nominal terms. So the two biggest chart mistakes that people make when trading are when they look at stock market returns, they ignore dividends. And when they look at asset returns, they ignore the depreciation or the printing, as it were, in the world of Bitcoin. Everyone looks at it as printing, but basically depreciating value of the currency that you're valuing it in. I just got back from a trip through Central Europe, which was fascinating. It was an incredible experience. We went through Germany, Austria, and ended in Budapest, which is an amazing city. And Hungary is a particularly illustrative thing because Orban, who is they're very friendly with Trump, has taken that country from inflation rates in the double digits down into the very low single digits now. And the country has a completely different vibe. But it's through the amount of building. I mean, we talked to business owners there. I mean, it was fascinating. I got in conversations with owners of multiple restaurants and other things, and they all say the same thing, which is, the government's going to put your hand in your pocket everywhere in Europe, but at least now in this administration, they're taking less. When we can get that here, then maybe, quote, the disruptive force that Trump is, we'll start cleaning out the Aegean stables that is the muck in Washington. And so you call it disruption, I call it necessary. We disagree politically. That's cool. That's a different show. But what's happening here is the dollar and the euro and every other fiat currency is being printed. So when I look at silver and I look at that chart, I'm thinking, well, geez, the first time it hit 50 was the Hunt brothers cornering it. Well, that's bullshit. You could take 50% of that move and kind of eliminate it from the chart, because if the manipulation didn't happen, it wasn't going over the 20s. The next time probably it was fairly typical, overextending. Now, if you look at it based in dollars, silver wouldn't look extended even slightly. And in fact, it looks like it's ready to start to follow gold, as Mike pointed out. Look, I think gold goes to 5,000. So I'm more bullish on gold than Mike is, which is kind of funny. I just think that basically takes my upper range for where Bitcoin goes up by the 25% that would indicate. That's the difference between the two of us. I think that gold is the baseline that Bitcoin is going to use as from a market cap point of view, and he doesn't. And we can banter about that all you will, but look, I agree with Mike. I am very nervous about the stock market. I keep seeing posts and talking to people, and when you talk to normal people, And I talked to people who had some Bitcoin or some dabbling and whatnot, but we talked to a lot of people this trip, just normal people or outside the bubble. I didn't log on except for last week's Macro Monday. I didn't participate in any of the crypto town halls. And what I saw this morning when I was going through X isn't surprising. So many people are talking about the stock market and they're happy about it. When people start quitting their jobs to day trade, that's when you know the jig is up. But it does make the selling when they're yelling. The yelling is not in crypto. There's no yelling in the world of crypto except for inside our bubble, and even there it's really small. And it's certainly not in Bitcoin. I mean, the overwhelming technicals seem to be bearish, but in the stock market, wow. I mean, everyone's talking about Nvidia. I must have heard Nvidia mentioned to me 24 times.
Not as many times as Palantir.
I want to transition to James, but I just have to mention one thing. We do not disagree politically. I did not mention one political view. I mentioned what the market, based on what's happening in the political situation. This is what the market's doing and why. So that needs to be pointed out. There was no political view expressed in this.
Okay, fair enough.
This is what the gold.
I am. You're right. I apologize. I was implying a political view.
That's just the point.
And you're right. You're right. Absolutely.
I think one thing we have to point out that we're not talking about is, of course, I'm also worried about the market heading into September. It's interesting that Bitcoin's making a move before that, and isn't that the way it's done it recently, where it's the head of the tip of the wrist spear, and it makes it move. It's moved first. And then kind of settles in, and the stock market does its thing, and other assets do their things and follow it. But I think the gold move and the silver move is interesting because gold, you would normally think, it's pointing to uncertainty in the markets. It's pointing to uncertainty across the world. There's a few things going on. That chart you brought up, Scott, of foreign central banks buying gold, more than they're buying treasuries, it would make you ask the question, well, who's buying treasuries? And one of the things is we're, the amount of treasuries that we're issuing hasn't gone down. It's just the end of the curve that foreign central banks would buy to hold is going down, because we're not issuing as many longer dated securities. We're not issuing the 7-year, 10-year notes as much. The 20 years a throwaway. I'm not sure why we even have that, or the 30-year. So then so that's one thing. You wonder, well, then who's buying? When you look at the auctions, who's buying all you see the foreigners, you see the, when you look at the auctions, but most of that's coming out of the Cayman Islands. And for the listeners, that means that it's hedge funds. Hedge funds are buying the treasuries. Hedge funds are buying the notes. They're buying the bills. Those are the ones who are buying it. So, and that's where you see those numbers. And I just saw a chart this weekend show that the Caymans, they're the largest foreign buyer of treasuries in the world. And so that's hedge funds. And then, on top of that, you wonder, is gold rising because of uncertainty? Well, it's rising here because of the realization that we are devaluing our currency a lot faster than we've admitted to over the last 25 years. And so the last 5 years, we've admitted to devaluing the currency 25%. And that's just crazy, right? So of course, foreign central banks are going to buy gold. That makes sense. That's number one. Number two, you think, is gold being bought because of uncertainty? Because we have warships moving around the world, because we have uncertainty around tariffs, because we have uncertainty around tariff wars. Is that, so we've got money wars, we've got physical wars going on. Is that part of it? Well, yeah, some people will buy gold because of that. I think in this instance, some people buy gold because of what Mike pointed out right at the beginning of the show, is that there's uncertainty around the markets heading into September. And then finally, the one thing we haven't talked about is people buy gold before the Fed starts cutting rates. And the Fed is almost certainly going to cut rates 25 to 75 basis points in the next 3 months. So we have to recognize that. And that's part of the move in gold here, is that people are gearing up for that reality. And most of the time they gear up for that reality. Why would they do that? Because the Fed is always late. 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 And that means the Fed is going to cut when it's too fucking late. And so they're going to cut, and the market's going to be going down, and people are going to be pouring into gold. So that could also be the anticipation of Bitcoin going down, gold going up at the same time. Tells me that you have investors anticipating a tough September. And that's kind of where I'm coming out on it.
So
yeah,
what's interesting to me really quickly, Dave, is that this really makes the case for stablecoins so clear. That chart to me just screams digital crypto dollars, as Mike would like to say, because I think right now with the pace of growth of stablecoins and the amount that we're seeing launched, they could be a top 3 buyer on any given year-to-year basis of treasuries. I don't think they'll be the
Tether's already a top 10 buyer.
Yeah,
you know?
There were 6, I think, last year. So let's imagine we get Citibank coin and PNC Bank coin and Western Union coin on top of the growth of Tether inevitably growing in the United States.
Western Union coin will take 25% for the fee for you to buy.
Yeah.
I just, imagine if you didn't have the stable coins moving forward, that blue line on that chart is going to start to look much more aggressive on the way down.
That's right.
Because the foreign governments are selling them, not buying them. Go ahead, Dave.
Yeah, I mean,
we're letting them roll off the book.
I wasn't going to go to stable
exactly.
coins yet,
Yeah.
but I think let's go there.
No, say what you were going to say.
Well, I mean, what I was going to talk about was the Fed governor who thinks she's all powerful. I mean, if you were scripting a way to get political support for auditing the Fed and ultimately creating real accountability, this woman is literally the poster child. I mean, she is direct from central casting of someone who is going to ultimately mean that the notion of a completely private Fed accountable to no one, which has been draped in this veneer of political independence, which is complete bullshit, has been complete bullshit, and basically since Volcker, is absurd, and it's going to happen. I mean, you don't have to be a political prognosticator to understand that the American people, when you mention to a person, to a normal human being, a voter, that the Federal Reserve is neither federal nor has any reserves, they think you're nuts. As soon as you say it, they're like, well, why the hell are they the most powerful people controlling the economy? Watch this space. They're going to force the people, the Rand Paul wing, the libertarian wing of the Republican Party are going to force the Democrats to have to defend this shit. Ro Khanna is in a safe district, but he looks like a fucking idiot when he talks about the Fed, because he tries to say, well, this political independence, it just doesn't exist. I mean, this great video that was made by AI, which talks about the history of the Fed being basically, engineered by JP Morgan, which is, by the way, is true, is very important. Having human beings controlling the single most important price on the planet, which is the price of money in the world's biggest economy, is going to be under attack. And that is one of the reasons that gold is sniffing this stuff out. You talk about Trump. That's a big one. Now, yeah, he's the agent provocateur in this case. Absolutely. But the truth is, when James says the Fed is always late, the Fed is always late, when Lawrence says that they are fooked because he doesn't want to get his account banned again, from Twitter, they're all right. I mean, we've laughed about the fact that they have 20,000 people and 900 PhDs and they can't they can't get a forecast right and haven't for 20 years. I mean, they make the local weather girl look like a friggin' genius when it comes to predictions. And yet we think of this as this almighty, all powerful person. Now, look, I personally said I think Powell's doing a pretty good job, as recently as a year ago or 6 months ago. And I think he did in a very difficult situation. But the truth is, we know these facts. Fact number one, there's a bazooka, a howitzer, that says if banks are going to go, they're going to print. We know that. So they're a backstop on the banks. Why do we need a backstop on the banks? Because we have fractional reserve banking, which is a system that was absolutely essential from the time of the Medicis to now in order to be able to have local lending work. Because we didn't have perfect information. There was isolated information and capital flows were expensive. Well, guess what? With the internet, capital flows are now completely mobile and information can move at the speed of light around the world. So you have to ask yourself the question, why are we propping up a system that pays bankers an extraordinary amount? Honestly, and this is going to piss off a lot of people, but I don't care because I'm in a ranting mood this morning. If the banking system was controlled by the Jews, we would start to see an even bigger increase in anti-Semitism, because if you look at what caused this anti-Semitism throughout Europe, and I went through a history tour of this for the last week, and I'll talk about this with anything. There were two major causes. Major cause number one, banking was considered a low-class occupation. And so the Jews were kind of pushed that, okay, you guys could do this. You couldn't own anything. They were basically pushing the stuff where they had to be mercantilist, but they couldn't own anything. Well, that makes, so you adapt and you go back. And the second thing, which just is a historical curiosity, is the Jewish culture involved lots and lots of washing of hands. And so they didn't die as much in the plague. And so they were called demonic and devils, and that continues to this day. So you learn these two things and you understand where anti-Semitism comes from. But if you think people hate the banks now, I mean, look at the greed. Look at what goes on in the banking system. Why do we have this printing? Why is it? Well, we have it because we've had 25 years of basically below market interest rates. With, as I pointed out, 5 of those years we didn't, but 20 or 25 years of negative real interest rates. And so we've had financialization. And that's what gold is sniffing out. That's what Bitcoin will be sniffing out. It's already sniffed it out a lot. And that's a large part of it. Now, that was a big rant, and I'm sorry for, for going off the rails on this, but I know you kind of like it sometimes. So, but yeah.
Those rants are great. Scott, can I just go? Good.
No,
can I follow that, Dave? First of all, our banters, I think this is the best thing we can do for our audience. Just point out some facts of history of the Fed. First, I suggest everybody take a look at the book, The Courage to Act by Ben Bernanke. The purpose of the Fed is to be there when things get bad. And that book, I think, nailed it. I don't know how many times he mentioned the stock market in there, but it really nailed it. Like, thank gosh we had the right people at the right time to help solve a Great Depression, which we were heading up. So the Fed that they were supposed to do then, I agree with you, James. They're always too late. We need a markets person on the Fed, someone who gets markets, like Scott Bessent. Why do you think he's pushing so hard for cuts? Because he sees what's coming. But another thing I want to point out, in the history of the Fed, one of the most significant things that happened was when President Carter appointed Paul Volcker. Paul Volcker went into that meeting. He said, inflation's a problem. I'm going to raise rates. And Carter knew right away, if I appoint him, I might lose the election. He did it anyhow. Now, that's a bit of a profile in courage. Carter knew what would happen. And this happened again. Now, we just had this big pump in inflation. It helped get rid of Biden and brought Trump back in. So I just be careful about the politicization of the Fed. So the key question I want to ask you, Dave, after I'm done with my slight little rant, is you suggest a better way to do it. Because right now, this is really good to have this point counterpoint. Every single economist on the planet will agree we do need separation from those who set monetary policy and the politicians, because politicians will do what Trump's is so blatantly obvious. It's awesome. I love that, because how is history going to judge this if he does get his way? So the key thing I want to point out, let's tilt it back over to markets a little bit, and then I'll let you go into that. The key things I'm worried about is there's major cracks in the armor. Like, first of all, MicroStrategy, the leader of everything, is broken below its 200-day moving average. Copper has collapsed from its high. What I saw in copper this last few months is exactly what I saw in crude oil in 2008. And I remember, so I got some of that trade right. I was early, I was wrong for a while, but by that end of the year, man, there's some really good P's in my profits just because I was trying to make up. So copper, if it breaks down, the whole system's starting to break down. And I like to put those together, and I love when people push back on it because they have an exact same kind of pattern like Bitcoin is. Everybody sees the trend going up. Everybody's bullish. The copper it dropped 22% in an hour. I mean, it's ran through stops. This is what markets do sometimes. This is one of the most liquid commodities on the planet. So this is why I see things tilting, and that's why I'm really worried as we walk into these next few months. But just remember a thing about anybody who complains about the Fed, it's like, give me a better solution.
There's one thing I want to unpack there, and then Dave, you can respond to the rest of it. Is MicroStrategy is a specific event, and that event is that Michael Saylor has moved the goalposts on investors on where he'll tap the ATM to sell stock to buy Bitcoin. And he originally said he wouldn't do it below 2.5, and now he's doing it. And so, and he's doing it at 1.5, 1.6. And so there's a lot of frustration from investors around that. They're really frustrated, and they're wondering if they can trust him because and you can see it online, and there's a lot of infighting going on around MicroStrategy, specifically around that issue. Now, not getting into whether it's right or wrong, or, you know, I mean, quite honestly, look, I still own MicroStrategy, and we own it in the fund. And long term, I think it is we will be one of the strongest, if not the strongest, Bitcoin treasury companies out there. However, short term, people are wondering how much runway he's got because of the issuance of the preferreds, and how much can he tap the market, how much of the capital market's going to be open to him, and is he worrying that they're not going to be open to him? Is he anticipating that, so he's issuing more stock, diluting the stock at 1.6 MNAV instead of 2.5?
Can I ask you a question, James?
Yeah.
So what's interesting to me on that, and Dave's pointed this out quite a few times, obviously, that the key to MicroStrategy's success, or the fuel, is volatility, obviously, right? So you know that in these very boring phases, consolidation, that can become problematic. But
yeah,
also listening to you, like, price isn't even really down. I mean, we're down 12 or 13% from the all-time high. Shouldn't they have anticipated, when creating these new products and releasing these new things, that even a period of sideways could start to be problematic? Because what happens if Bitcoin actually drops, if the market's actually already concerned about boring for 3 or 4 months?
It's only problematic if he still needs to be buying Bitcoin. I mean, quite honestly, look, there's a lot of different ways you can play this. I'm not going to second guess Michael Saylor. He's made tens of billions of dollars on this strategy with strategy. So however, the question is, does he really need to be tapping the ATM here to be buying Bitcoin here? Does he have to keep buying Bitcoin every single day?
That's a better question.
That's the question. And so that's what's frustrating investors. That's what you're seeing on X, on Twitter. That's what they're wanting. But the bigger question around that, to Mike's point, this is where I think Mike is hitting on the right point, is now you've got, this has started the conversation of what's the MNAV that all these treasuries should be trading at? Should it be 4, 5, 6, or should it be 1.5 to 2.5? And I've been saying for a very long time, they're gonna be gravitating down to 1.5, 2.5 level over the course of time. Now, that doesn't mean that's a bad thing. It's just reality. You can still make money in Bitcoin and in these treasuries with Bitcoin going up, even if their MNAV is contracting. So
shouldn't you just be buying Bitcoin and shorting any treasury company that has a premium to NAV over 2?
Well, I mean, that is a strategy to play. The problem is that to get into structure, and this is a good question. This is a question I get on Twitter a lot, is like, why don't you just borrow and sell and short these things? Well, the cost to borrow these things is astronomical. I mean, astronomical, which is another reason that the MNAV just stays very high, because you can't find shares to actually short. And if you are finding shares, some of them are over 100% premium a year. 200% to just borrow the stock. So
it's important to dig into why, because the why there matters a lot. Boy, there's like 3 different threads I could pull on. As far as the Federal Reserve, the answer is nobody. The market should be setting the price of money, and we should have a sound money policy. And I think the great lie, the biggest lie that has been told to economists for the last 50 years, is that inflation is needed in order to have productivity and advancing population. And so a 2% or whatever inflation target is good, because otherwise we'll get a deflationary collapse because of technology. I think that is the biggest single lie that's been told. It is worth digging into.
Most insidious lie.
Honestly, I think the best way to do that, Scott, so when we start doing shows, because we're going to do my own show, Mike and I should do a long form show where we literally debate these particular structural issues, but that's not what people want to hear about today. So let's table that for a second. But I do think it's a really important topic, and I totally agree with that Mike's exposition of this is really meaningful. So let's stop that. But the thread I want to pull on that James just mentioned in terms of MicroStrategy and MNAVs is fascinating. Look at banks. By the way, the right range is 0.75 to 2. is probably the range of MNAVs. The really best banks, the ones that can generate revenues in excess of just holding book value and being in line with the market, can get towards 2. The ones, and sometimes over it if they have really explosive new businesses. But the average crappy bank often goes below book value. Happens all the time.
So hold that for just a second. This is why we've been saying on our partner calls that we're looking at JP Morgan as our target MNAV on, with their book value for the long-term MNAV for MicroStrategy, because of what we believe they will be able to do with their book of Bitcoin. And that's a 1.5. That's a 1.5 book value for,
right.
And that makes sense to me. That's long-term. I don't know when it settles there.
And if it makes sense too,
if Bitcoin rips to 125 to 150,000, MicroStrategy's MNAV is not staying at 1.5. It's going to go up, in my opinion, and it's going to spike up. And so that's just reality. But okay, because we're in a sideways grind, like you pointed out, Scott, it's just getting a little bit tedious for people. But go ahead, Dave.
Okay, so let me pull on one thread, and then I have a screen to share. So the pull on one thread is when you talk about hard to borrow. When Bitcoin became incredibly hard to borrow and people were paying, not hard to borrow, but expensive to borrow. So when going long on the preferreds, on the perpetual swaps, or futures markets become extremely expensive, to me, that's an extraordinarily good top signal. It talks about euphoria, et cetera, et cetera. It still is. By the way, we're nowhere close to that. I mean, we haven't had that at all during either the 8 months that went back over a year ago or the last 4 months. We just haven't had any signs of derivative-led buying that did Bitcoin. But Bitcoin is a free market for borrows. Most of these treasury companies are what we call specials. They are companies where the float is held by the owners of the company. And the owners of the company are smart enough to say, well, screw this. I'm not going to let these be available for lending. And so they hold it out. There's no Bitcoin. Bitcoin doesn't work that way. I mean, those rates are economically set. They are what people call paper Bitcoin rates, but it's the exact opposite effect in this particular case. They're market rates. Whereas the rates for specials, and this is not just in Bitcoin Treasury, this is, if you look through all the hard to borrow lists, there have been situations. I can remember when we were at 2 Sigma, there was a natural gas ETP, exchange traded product, that was run by Credit Suisse, and Credit Suisse refused to let it be borrowed. And so effectively, this ETP went to an MNAV on natural gas of 4.5. And of course, every market maker was short it, and we couldn't borrow it. And so therefore you got bought in, and you just had to play it, know very well that you couldn't really be short this thing. Eventually it collapsed. But the fact is that these things can continue for a long time. So
just for the listeners, what that means is that if someone wants to sell their stock and their prime broker has lent it out, if they want to sell it, that means that they're going to have to go get it. That means that they're going to call you if you're a short seller and you borrowed it, and you have to give it back to them, and you have to buy it at the market to get it back. And that's called getting bought in.
That's right.
That's where your face gets ripped off.
Right. So there's a lot of this. That was that thread. But you mentioned MicroStrategy. So Scott, can you pull up the screen that I shared?
Yeah. Get it right here.
So this is the 30 and 60-day Bitcoin volatility over the last year. If you want to understand why MicroStrategy stock, what it's done, I don't have the ability to overlay this with MicroStrategy stock, but I think you'll notice that those spikes are exactly where the stock did well. And that's because in those spikes, they were able to make those great sales of STRK and all the other stuff. But when it's down at these levels, which are at the low over the last year, and you can go back to forever, I can do a larger chart if I wanted to. Let's go back. Let's go do this. So this is 1 year. You do 5 years. So yeah, there have been some periods in 23 when, post, whatever, where you got a little bit lower, but the 60-day, we're pretty close to the bottom over the last 5 years. And you could chart this and look at the scale here. We're at 1.29. The peak that we've had recently, even in the best bull market this year, the best of it was 2.25. I mean, you can go back 5 years, and Mike always likes to do this, and we were at 5.18. I mean, it's dramatically lower. So when you talk about a VIX of 16 to 20 on the CME, I mean, we don't have that many periods of VIX at 100. When VIX is at 100, you should be backing up the truck to buy. right? Because generally the markets have collapsed, right? So we're at those levels, in roughly speaking, in an inverse sense. So it's important to understand that. So if you're Michael Saylor, and he's a smart dude, he says, look, volatility is really low. I'm not going to be able to sell anything else. I want to continue to add to my pile. Yeah, I'll get some pissed off investors. But remember, he owns 10% of the stock. The likelihood of a human being doing, if he thought it was a bad idea for his stock, then he wouldn't be doing it. He's doing it because he thinks it's a good idea. And he doesn't care what people yell or scream about. He doesn't care about the short-term movements of the stock. He cares about where the stock's going to be in 10 years because he doesn't need the money right now. He cares about his legacy. Now, is he making too big of a bet? Maybe it happens. I mean, we've seen lots of people like Icarus fly too close to the sun. Is he doing that? I don't think so. But that's what you're basically arguing if you want to be short this thing long term. If you believe that it's a reasonable way to play a evolving Bitcoin ecosystem, on the other hand, then it makes sense. So, I see the views on this. Like, I'll call out Dr. Donish, who thinks MSTR, he made a post, but if you're long MSTR, it's an IQ test. And if you're long it, you failed. It's like, okay, I don't know which between he and I, whose IQ is higher. I'm guessing it's within punching distance of each other. He's a smart guy. But the truth is, it's not. If you buy it at an MNAV of 2.5 to 3, and then sell it when the MNAV goes down to 1.6 or 1.5, yeah, then you're an idiot. But if it's a long-term hold as part of your portfolio because you think it makes sense for a bunch of reasons, particularly if you bought it from lower levels and don't want to take tax hits, not an IQ test. But that's what's going on. It's really simple when you look at this. If Bitcoin volatility going to return, of course it's going to return. It's going to revert to the mean, and you'll end up at a volatility in the 2s, and that will allow them to do things that will effectively goose their MNAV. And that's James's point. Does that make sense?
Yeah.
Okay.
Yeah, that's exactly right.
Should we talk about? We had two topics I wanted to touch on. James, you can finish that if you want.
No, I mean that was the point, though, is that we're gonna see some shakeout here. I don't think that it's over. I think the capital markets are still available for these companies, and it's going to continue. And it's going to continue for the top companies for a long time. It's just it's going to consolidate, in my opinion.
Okay,
yeah.
so
you had another topic, Scott?
I want to talk about Venezuela.
Okay.
Because just touch on it, because it seems relatively important that we've sent 3 warships off the coast, and we have a congressman who's basically bullposting the idea that we're about to go to war, saying that thanks President Trump that Maduro, head of the criminal cartel, has a $50 million bounty, and then saying he's about to get annihilated. So listen, I'm not saying that this guy necessarily knows, but this is the United States government sending 3 warships to the coast of a foreign country, I believe 4,000 U.S. soldiers and others in support. And Maduro's saying they're coming to get me for a regime change, which is kind of an American thing to do, especially in
we usually do it through the CIA, though.
Yeah, we usually do.
I want to make 2 points. First, I absolutely 100% think that pretty much every single time we attempt regime change, it screws us. It's a terrible idea. So I am not suggesting it. Okay, let's get that out of the way. But Mike's thesis on oil is very much a play here. Venezuela is one of the richest countries in the world. Venezuelan citizens used to be in the top 5 richest overall per capita GDP. Venezuela, since Chavez and Maduro have implemented the same policies that Zoran Mandami wants to put in New York and Bernie Sanders wants to be national with AOC, has gone to now the poorest, into the bottom 10% of per capita GDP, despite all these riches. There is a very big tail risk to oil. If Venezuela ever were to go back to being capitalist, where money flows could be understood and you can increase their oil production back to where a capitalist-led system, that is a huge supply of oil that comes onto the market, and it makes it is not a good thing for the price of oil. We'll just leave it at that. And if you think that this doesn't have anything to do with Trump trying to put pressure on Putin, then you're not paying attention. People, follow the freaking money. What is the single best lever we can put on Putin? It's to decrease the price of oil. What's the best way to do it? Find new supply and get it online. Now, I know people aren't going to connect the dots on this. Even Simon Dixon, with his wacko conspiracy theories won't connect the dots on this. But this, you don't have to look very far to understand U.S. foreign policy for decades has been about keeping the price of oil low. Whether they succeed or not is a matter of question. Whether this will work or not, I don't know. But if you think that this isn't part of it, you're not paying attention. The government wants the price of oil to come down. Venezuela has absolute shit tons of supply and are really shitty at pulling it out. You know, the whole court, we could also talk about the court case. I mean, Mike, you remember the court case with Chevron, right? I mean, this is a big deal, but it's not going to be a big deal in the short run. Just watch this space. In 6 months, we'll talk about it.
Perfect. Mike, any thoughts, James? I guess
no, I was going to hit on the same. I was going to hit on like the same theory about oil too. Now, what the ultimate outcome is hard to tell. But I mean, Venezuela is obviously is one of the largest suppliers of oil in the world. So
yeah,
it's not hard. You don't have.
I think you all nailed it.
That's right. What's that?
It's the macro bigger picture. There's just so much more gushing supply on a global basis. Even China's coming up ways to bring on more supply, just following some of the technology that U.S. is using. And there's significant pressure on demand. BYD is proliferating around the world. And that's just one automaker are just replacing things. Like I point out, is my BYD baby is 11 years old, and now it's a Chevy Volt. Is that same car is 3 times as efficient and half the price. We have to have tariffs on it, because the deflationary technology is so significant. But I'll stick with that call, and I'll wear it if I'm wrong, that I think oil's not going to bottom to around 40. That's what it's done for the last 20 years. It has to get below that cost of production, with the U.S. is around $55 a barrel. And that's the low for the year. So it's bounced for now. It's got to make it difficult. And it's never ended the year above 100. And that's why we're getting towards the end of the year now. So it's that gold Bitcoin, it's that gold to crude oil ratio I find exceptionally scary. All the gold ratios are exceptionally scary. Highest ever versus commodities, certainly versus gold, crude oil. We've never ended the year. You go back 100 years, and the end of the year high was 39. One that started in 1933. It didn't matter as much then, and then in just a couple of years ago. So it's significant to mention it, because those are severe deflationary forces. A lot of it's a rapidly advancing technology. Jeff Booth is all over it. But I want to tilt over to a little bit to that. I don't know what's going to happen in Venezuela, but I think, like Dave said, we might have a pop in crude oil, but anytime you get a pop, people just can't wait to sell forward, particularly the largest producer in the planet, that's U.S., a net exporter. But I want to tilt over to a little bit what's happening with severe deflationary forces in the world's second largest economy, who, first of all, I completely agree with you. The best way to hurt Putin is just crush the price of oil. I mean, I wrote that a few years ago. I think we're getting there. Trump's getting it, and his constituents are like it. The bond market would love it. But here's the thing I'm really worried about is
like just to put a little cherry on that. The best way to hurt Putin is not to freeze his assets and take his treasuries. Like, that's not the best way to hurt him. That was the stupid income. Yeah.
It's drill, baby, drill, also, whether here or elsewhere.
Yeah. Finish up, Mike. Yep.
Well, it's not just but it's everywhere. I mean, it's just the average vehicle now.
Everywhere.
It's more cost effective. Just the technology is overwhelming. It's like we don't want to go back to, to rabbit ears in our TVs. We got a better technology now, and that is electric cars. It's just a matter of time. But here's what I want to end with, and I don't know if you want to tilt already. I'm really concerned is we have 300% debt to GDP running in China based on some estimates. That's Goldman Sachs. We have their money supply around $45 trillion. That's double what's happening in the U.S. They're massively pumping this system. Despite that, the 10-year note yield is about 1.77%, which I think where the U.S. is going. And the latest PPI measure, which I don't know if we can really trust it or not, you can trust a bond math, not a bond yield, is minus 3.6%. So to me, this is what's happening. What people are missing, and what happens a lot of times is, yes, we'll get massive printing, but it's when the U.S. stock market right now, when it drops 20%, that's 40% of GDP. That's the most in 100 years. I mean, it's right now about $70 trillion. And that's why we're being propped up on just a little bit of, the cards are tilting here. That's why it's so important that cryptos have to stay expensive in the next few months or everything. But I'm just pointing out. Shoot.
Yeah, you said 2 things which are really fascinating and I think needs to be pulled on. One, you talked about how the debt to GDP in China is exploding, yet the 10-year is crazy cheap, meaning, they don't have to pay much to borrow money. Who owns Chinese government bonds?
Well, exactly. I hear it's mostly domestic, and I've heard a lot of it is James would probably know that. James, why don't you nail that one?
That's right. No, it's mostly domestic. That's right.
And why would people be dumb enough to continue to buy them? There's a short answer.
Because so put it this way: you're running a company, and we know what's happening. So our whole livelihood for the last 30 years has been exporting and invest, U.S. corporate profit greed. Said, sure, we'll export to the U.S. These corporate profits, they know they can make profits. They import our cheap stuff. They just shut that off. And then the rest of the world's pushing back to this deflation. To me, this is a global depression just getting started. And the next few months might signal it. Unfortunately, crypto should lead the whole thing. If cryptos drop, everything falls with it. And the number one hottest crypto on the planet, as I mentioned, is leveraged Bitcoin MicroStrategy.
Where is it? How is it even remotely possible that China, which is already printing like crazy, has cheap costs of money? What would happen? And we know the answer to this. It's a totalitarian country. Xi doesn't let them. But if Xi let Chinese companies put money into Bitcoin or gold, look, I remember buying Chinese coins.
That was the answer to your question. Why? Is because they have to.
They have to.
They're being forced to.
And so, but there's a limit to what they can buy, and there's only one way out. The one way out is export like crap and push more and more money into the system. Keep blowing the bubble bigger and hope to grow your way out. And at some point it's going to fail. You're right. It has to, because you're the first one to talk about this, Mike. I always give you props on this one. You say when an economy is controlled by one man, it ain't going to work, right? It doesn't encourage entrepreneurship. Doesn't encourage people want to get their money out. And so what happens when that money does come out, if it comes out? That's a very big deal. And we're way away from that now. But it's really
there's crypto dollars there.
It becomes harder and harder. The argument for Bitcoin into the crazy sphere, the Bitcoin crazies, I call them, even though I might very well be there and I'm wearing my orange shirt today, is that all of this ends up in Bitcoin because governments can't control it. Now, I don't believe that that's completely true, but by any stretch of the imagination. But understand something, that one of the escape valves for all that money in China is ultimately going to be Bitcoin. It's one of them. And that is, and so when you compare Bitcoin as a quote risk asset tethered to earnings, which are going to be under pressure for all the reasons that you mentioned, that's where it's a problem. And when you talk about all these cryptos, yeah, there's a lot of cryptos that are there, and those could suffer too. I mean, look, I haven't looked at Bitcoin dominance. I'm just looking at Bitcoin's price having not moved, and I'm looking at altcoins not named Solana, and to some degree Ethereum, and they haven't had a very good week, right? I come back and I see that, and so what you're seeing is a very large. I mean, look at XRP, for example. Right, XRP was Bitcoin. Is still, I called it leverage beta on Bitcoin, so it's underperformed. It's basically been what it's been, and so so we're seeing some of that. But you always use the word competitors too. I just think of Bitcoin as very different than the rest of crypto. In the same way, gold stocks are very different than the rest of the S&P. They're all stocks, right? It's that. But your point about China and why it is because people are forced. In Japan, it was a little bit more subtle. People weren't forced, but that's all they knew. They had their postal savings accounts, which owned JGBs. And JGB yields are finally, as the economy is aging out, and people are looking at this saying, what the hell am I doing with this? That's why JGBs, and that's why Japan is a problem. You haven't mentioned them. That's another huge issue in the global economy. I mean, when you look at Japanese bonds, and you look at their yield curve, it's definitely concerning, right?
Very.
Yeah. The long bond's getting pretty steep there.
Yep.
The 10 year is all the way up to 1.6%.
Which sounds a little, but where did it come from?
But remember, they were holding it at 0 to 25 basis points for years.
Yeah.
And it has blown out. They let it go and it's blown out. So,
yep, no, it's true. I mean, what's to stop it from doubling again to 3%? And then what would that mean? It would there'd be some big implications there, and we'd have to go through it. But those are the point. Those are the things that people are going to start worrying about. Yeah, you're right. I just think that's bullish long term for Bitcoin.
They're by far the largest buyer of their own debt. So, and that's this goes back to Mike's point, that he brings up quite a bit. We're all turning Japanese, and it's a little bit, and that's true. I mean, China's on that road.
But the difference is you and I look at this as bullish for Bitcoin. Forget the rest of crypto for a heartbeat.
I do.
And Mike looks at it as bearish for Bitcoin because he looks at it as a risk asset. It's that, but that's the knife edge here, right? That's the actual. And by the way, Mike could end up being right in the end. I mean, anyone who thinks that just because we have opinions means that we're gonna bet our lives on it. I'm not betting my life on anything, but I do think that sound money will win in the end, right? I do think that is where we have to go back to.
Be on camera.
Yeah, you didn't turn off the mic, Mike.
We did for a second. It says he's muted, but yeah. So listen, with a few minutes left, should we extend that conversation, or I've got two other things on the docket that we could talk about. We've got the launch of World Liberty Financial.
Go ahead, pull something out of the hat, Scott.
World Liberty Financial today, in theory, or we could talk about the looming consumer debt crisis that you wrote so eloquently about, James.
Well, thank you. Well, I mean, that will tie in nicely to the rest of the conversation, which is
exactly,
we're playing with leverage, and that's the fire that is going to burn us, and we've just got to realize that. And I was writing about this. I noticed that the New York Fed put out their report, and for the second quarter, of course, everything is lagging. Every single freaking indicator we get from the economy is lagging, but this one is giving you a pulse of what's going on right at the moment of when it's measured. The problem is then it's put into a report and reported, and now we're bumping up against the fourth quarter, and we're looking at these numbers from the second quarter. So what has happened since then? Well, at the end of the second quarter, you had $18.3 trillion of consumer debt. And okay, so that sounds like a big number. It's hard to even wrap your head around. It doesn't even matter, because what really matters is, are people in trouble on that debt? And the answer is increasingly yes. And so you're getting default rates that are bumping up against the 2008 levels. And so credit card defaults are up around 13%, I'm sorry, they're around 12%, which is close to the 13% of the great financial crisis. And that's as they're already not paying their student loans. So they've walked out on the student loans. They're expecting some sort of relief there, which is not coming. And at the same time, you've got your auto loans those default rates are at 5%, which is close to the level they were in 2008 as well. So these are just things that you have to be paying attention to. And so because it's kind of the canary in the coal mine and it's such an obvious thing. And I don't know why, regular investors don't look at this a little bit more closely, probably because it's all lagging. But if the consumer's not doing well in an economy that's 70% consumer driven, that should tell you something. So just be aware of that, which is why I think ultimately the Fed is going to say, we got to start lowering here. We've really got to start lowering here. The unemployment rate is not looking that bad, but it doesn't get adjusted. It doesn't get revised. The employment numbers get revised, but they don't revise the unemployment rate. So let's see where that comes in. And we've got the PMI comes out tomorrow, I think. Is that right, Mike? And then you still got another CPI, another PCI. You've got PCE numbers. You've got some important numbers that are coming out, but the health of the economy is driven off of the health of the consumer. The health of the consumer is looking a little bit shaky, so just be aware. My thesis is that we're going to get liquidity before it gets out of hand, but that may not be the case. So just be aware of that. And of course, Bitcoin would have a drawdown if we have a whole market drawdown. Everything will go down. It's the correlation of one trade. Maybe
gold will go down in the beginning.
Gold could go down. It went down. It went down. Quickly on a drawdown. Like if you have a black swan, people don't know what's going on. They just they just try to go and get everything out of the market. So they'll have to sell gold because they're going to that's going to be available for them to sell, and they're going to have to sell it in order to meet margin calls.
All those ETF buyers are going to say, okay, I need money.
Yeah, I mean like
it happened.
But it's quick. It's a quick P. It is a quick P. And if it's a risk, if it's a risk event that people are worried about, then they will pour into gold, because on the other side of that trade, and the other side of all of it, they're going to pour into things like Bitcoin because they know that the money printing is coming.
So let me piggyback on that. I had the honor of seeing and meeting Chris Waller on Thursday at the Economic Club of Miami. Got great press. Everybody kind of saw what he said. He wants a 25 basis point cut in September. It's already at 88%. That's going to happen. So I'm going to make a prediction. I think what's going to happen in fourth quarter as we enter this year. The Fed is behind the curve. I agree. The consumer is getting hammered. It's just waiting for you to say
where they're comfortable being, and they've said it all along. They're comfortable being behind the curve on this.
Yeah. So let's look at what they did when they hiked last year. Employment, remember, had shot up really quick from 3.4. We all agreed it was going to 6. It's been stuck at 4.2 forever. Now, the latest employment number is supposed to go up to 4.3. But that 12-month volatility of unemployment right now is the lowest in 20 years. So it's stuck there. At the same time, actually, so it hasn't moved.
How much of that was driven by fiscal spending, Mike? That's the problem there.
I get it. I understand. I'm just pointing out that's what it is. What it is. That's what it is. So the point is, I want to make a prediction. I think the Fed, they're going to cut, but here's what's going to happen. I think is risk assets are going to sense that they're behind, and the consumer is still strong right now. But when risk assets go down in this environment, it brings down the tide goes out. So I think the Fed's going to keep cutting. I think they'll accelerate cutting as risk assets go down, which means the stock market, cryptos, and Bitcoin. And the number one thing that's way overdue for a little bit of catch up, if we agree, if gold's going to go down initially, and it's because people hit stops, then the number one thing that'll pop up is T-bond prices, and down is T-bond yields, because that's a severe deflationary force. Now, that's the thing that's going to see this happen in the next 3 months. I hope it doesn't happen, but I think that's still my base case, and that's why I think gold is front running. But what's the bottom line here is the Fed will be cutting. Chris Waller might be the next Fed governor. The thing is, this might be a series where they have to be cutting, and I think it's going to last for a long time. We're just going to keep chasing it down, because the number one, we got to mention, we all mentioned the elephant in the room. The biggest elephant in the room for all risk assets on the whole planet is U.S. stock market's almost $70 trillion valuation.
Yeah. Well, these are all trades, though. We have to remember, first of all, I think Bitcoin's already sniffed out what the Fed's about to do. Okay. So that's why you've seen, it's down 3 straight weeks here. And it went sideways for 4 weeks before that. So, the Bitcoin has had it's been in a malaise here, a summer malaise. Okay. So what's the trade? Stock market everything starts to collapse. Stock market goes down, Bitcoin goes down, gold goes down, treasuries go up. And then the flip side of that, and the other side of this trade, is treasuries go way down. That then you've got Bitcoin and gold go way up, and the stock market follows it. And that's the way that the trade's going to go, because they're going to come in with the money printer, and it's going to be a massive liquidity injection, in my opinion, because they just need it. They have to have it. You cannot have the stock market go down. You cannot go into a recession and blow out our deficits from 2 trillion to 4 trillion. You can't have it, which could easily happen if we have a real steep drawdown and we go into a strong recession or depression. You could easily see $4 trillion, $5 trillion deficits, and that they can't have. I mean, it's just not. Percent won't let it happen, and guess who else won't let it happen? Trump. He's going to put pressure on every single angle he can in order to be sure that in these midterms they don't have a crash in the market and the economy, because this is the next year is it sets up for a flip in his power in DC, and that is a problem for him.
Yep.
We didn't get to talk about World Liberty Financial.
Well, it's down a bunch. I was just looking at it.
See what happened.
I mean, I think tomorrow will be.
They were supposed to have a circulating supply of 5 billion, and all of a sudden it was 24 billion. So everybody dumped it.
Well, I mean, it is what it is. You know,
Some
it's
smart
like
contract things going on there. I guess they didn't differentiate between their treasury company, Alt Phi Sigma, and the other vesting contract, and ended up.
I am a nonstop broken record on the topic of tokens, which is there needs to be a disclosure regime. We need to know when you're buying something, what the fuck you're buying, what the revenues are, what the ownership is, what is it? I don't know. I haven't looked. I'm not saying they haven't done it. I'm saying that once people start figuring it out, then you can actually evaluate it. Until then, it's so hard. I haven't done the research yet. I'm probably going to do that today just as a hobby because I'd like to understand it before we talk about it tomorrow morning on Crypto Town Hall.
Right.
But
I just think it's going to be an important conversation over the next weeks based on the performance. I think that this is the final barometer for the chances for altcoin market outside of anything listed publicly on the stock market.
The question is
if this thing can't go after what we saw with Trump token when it promises actual utility, they have actual
but it
holdings.
could be. But maybe it is. Maybe it just was hyped up, and it's not. It's a question. Of
maybe it's doing exceptionally well. Yeah.
What's the value?
Yeah.
I mean, it's really a question of value. I mean, if you buy a token and you're buying a token because it's a meme, well, that's very different than buying a token because there's a revenue stream attached to it or an ownership attached to it, right? I don't know the answer. Until you know that, you can't make those questions. You can't have that conversation. I'm not ready for that right now.
We'll talk about World Liberty Financial tomorrow, the next day, and probably into perpetuity for the rest of our existence because, what else is there to talk to besides President Trump and crypto? All right, guys, I'm going to let everyone go enjoy your Labor Day. James, thanks for waking up early. Dave, welcome home. Mike, enjoy the rest of your vacation. And we will see you guys. We will see you guys next week. Thank you, everyone. Have a good one. Happy holidays.
That's dope.